はい、皆さんこんにちは。私はマネックス証券のハッチこと岡本平八郎です。今日はジャナス・ヘンダーソンの投資信託のご紹介をしたいと思います。ジャナス・ヘンダーソンなんですが、こちらは2017年にですね、アメリカの運用会社のジャナスとイギリスの運用会社のヘンダーソンが合併してできたアクティブ運用専門の運用会社です。ちなみに私はですね、1990年代アメリカで働いておりまして、アメリカ住んでたんですが、その時にジェナスのファンドに投資をしていたことがありまして、こちらの会社のファンドにつきましては非常にいい印象を持っております。で、今回のお話なんですけれども、株式だけではなくてですね、債券にも投資をするいわゆるバランスファンドのお話ということで、ジェナスの本社がありますコロラド州デンバーからアメリカのグロース株と債券に投資をするファンドとなりますジェナスバランスファンド担当、クライアントポートフォリオマネージャーのフィリップ・ウッドさんにお越しいただいております。 Good morning, Phil.
Good morning.
Welcome to Manex.
Thank you.
Can you please introduce yourself and talk about your company, maybe research capabilities and fund management?
Sure. So my name is Phil Wood. I'm Global Head of Client Portfolio Management for the Equities Strategies at Janus Henderson. And I work out of our offices in Denver, Colorado. The role of the Client Portfolio Manager is to act as the primary liaison between our clients and our portfolio management teams. So making sure that our clients understand the investment philosophy, the process, and the performance of the strategies that we offer. So within the Janus Henderson Equity Group, we focus very significantly on fundamental research. You know, it helps us in the security selection of both the equity and our fixed income securities, understanding what are the drivers of that particular company's success. And so we feel the bottom-up fundamental investment approach is the best way to generate active returns in the investment market.
As an active investment manager, what are the strengths of Janus Henderson?
The strength of Janus Henderson is really in our people, because it's the people that every day are doing the investment work to decide which securities we put in a portfolio, whether they be equity or fixed income instruments. And so, you know, the 330 investment professionals averaging over 18 years of industry experience are really the strength of the firm and how we strive to differentiate ourselves from other firms.
So you're a client portfolio manager of balanced strategy at Janus. Can you please explain the feature of this particular strategy?
Sure. So the balanced strategy is a combination of equity and fixed income securities designed to provide our clients with that equity-like market return, but with less volatility provided by the investment in fixed income securities. So, we design the portfolio to participate in the equity markets when they're up, but when there's market volatility and maybe the equity markets are going down, the fixed income portion of the portfolio is designed to mitigate some of that volatility, producing a more smooth return stream to our clients. One of the hallmarks of the strategy is the collaboration between our equity and fixed income teams, utilizing a dynamic asset allocation approach. So it's not a strategy that is fixed equity and fixed income. Based on the economic conditions and where our portfolio managers see the best risk-adjusted returns, they will adjust that allocation between equity and fixed income.
So I understand your balance strategy has the biggest asset under management among Janus Henderson's variety of funds. Tell us why this strategy is the most popular one among your clients.
Yes, thank you. We have a client base that spans the world, from individual investors to financial advisors to corporate retirement plans and insurance variable annuity platforms. And so I think what these clients all perceive in the fund and what they've grown to appreciate in the fund is this process of being rooted in fundamental security valuation and an active investment process of finding those equity securities that we think provide growth opportunities in the portfolio, while also actively managing the fixed income portion of the portfolio to mitigate some of that equity market volatility. So I think it's for that reason that we have clients that are very attracted to it, providing that asset allocation framework that they don't have to think about. It's a simple approach to providing both equity and fixed income exposure to many different types of clients.
For the equity side of the portfolio, you focus on growth. Why growth?
Well, growth, we feel, in the investment markets will achieve greater returns over time. And so our focus on those companies that have that competitive advantage or they have some competitive moat that we talk about relative to the rest of the industry makes us focus on those companies. Long-term returns for growth stocks are better than that of value stocks per se in the market. And so our focus is on finding those unique companies that have innovative stories that are building, their earnings per share over time and providing to us as shareholders really good our returns on our invested capital.
Now, the fixed income part, can you please talk about how you're managing the fixed income side?
So within the balanced portfolio, the fixed income is designed to act as that ballast to the equity allocation, so to provide that risk mitigation tool. And so we actively manage the fixed income portfolio using typically U.S. Treasuries, mortgage-backed securities, corporate credit, and other securitized instruments. And so very transparent in how we manage the fixed income portfolio. So we will manage across sectors, so we will adjust our sector allocation within fixed income. We will manage the fixed income portfolio in terms of it along the yield curve. Do we like short duration, medium duration, or long duration fixed income instruments? And we can also manage the overall duration of the fixed income portfolio. So it's through those three ways that we provide this ballast to the equity portfolio, striving to achieve positive return in the fixed income allocation, but we're really looking for most of that return generation to be in the equity side of the portfolio.
So why do you think the retail investors in general should invest in the fixed income?
Well, fixed income is a way to dampen volatility throughout the rest of your portfolio. Certainly you want to invest in equities to give yourself the opportunity to grow your capital, your retirement capital over time. But as we know, equity markets can be volatile. And in times of volatility, the fixed income markets can offer that buffer to that equity market volatility. Now, we certainly didn't see that in 2022. But that was only the fourth time in history that both equity markets and fixed income markets went down at the same time. So it was a very unique circumstance in that way. But like I said, or like I offer to investors, is that the fixed income markets now, the rates in the fixed income markets have gone up significantly, 500 basis points in the last 12 or 15 months. And so I would say today the fixed income markets are much more attractive to invest in for that yield that they are generating in portfolios today. So that's why I think fixed income investments have a role in anybody's portfolio going forward.
So lastly, do you have any message to Japanese individual investors who are already investing in your funds, and also for those who might be considering to invest in your fund?
Yeah. Well, certainly 2022 is a difficult year in the investment markets, and I think everybody recognizes that. But when we look at 2022, we look at it in a way that we felt like the markets kind of reset themselves for the opportunities going forward. Rates rose, the Federal Reserve's rate increases brought rates up quite significantly to, about a 3.5% 10-year rate today. And so we feel that provides the opportunity for fixed income to act more as that ballast to the equity market volatility. Similarly, the reduction in equity valuations during 2022 reset kind of the valuation on equities in general. And so we feel that also provides more opportunity for equity investors to participate in more market upside. So bringing those two together, we feel like 2023 and beyond, we're in a much better place than we were at the beginning of 2022. And this portfolio kind of utilizing both sides of the market, we feel is a very opportunistic time today to invest in it.
Well, Phil, thank you very much for coming to our office today and talk about your fund. And
Happy to do
see you
it.
again.
Thank you, Hutch. I appreciate your time.